Hi everyone, welcome to this session about some recommendations to the implementation of UBI in Colombia, and particularly about its impact on poverty and inequality. I have recently published this book on the topic from a broader perspective. The book is in Spanish, but if some of you wants to read it, go to the webpage governance.co to check it out. The basic idea that I want to explore in this presentation and in the paper is that UBI should be a point of arrival for Colombia's social protection system, for any country's social protection system for that matter. Let me get a little poetic about it. I think UBI could be the third greatest social revolution in recent centuries. For me, the other two were the abolition of slavery in the Americas and the transformation of the role of women during the 20th century. However, for me, the implementation of UBI should resemble more the women's emancipation than the slavery abolition. Let me explain why I think like that. In order to abolish slavery, and this is mostly true for North America, a decision of constitutional nature had to be made. This decision in the hands of politicians meant chaos and war. Let's suppose we would have done the same thing with women. Let's imagine our societies in the early 1900s, and let's imagine bringing a proposal before our parliaments to give women the role, rights, and benefits that they have today. I am positive that this would have meant chaos and very little possibility of agreement. But fortunately, women's emancipation took a different road. Several very different steps were made throughout the 20th century to achieve what we have today. I think there is enough evidence out there to back by women. When Richard Nixon, a very conservative president, proposed in the late 60s the implementation of the Families Assistance Programs, a majority Democrat Congress did not approve it. On the other hand, prior to June 5th of 2016, polls showed that the majority of Swiss were in favor of a UBI. However, 70% voted against the UBI that day on the referendum. Implementing UBI at one strike is almost impossible and very risky. That is why I propose its implementation in several phases, as many as a country needs to transform what they already have as protection into a UBI-like program. Let me clarify a couple of things before moving on. I propose as point of arrival a UBI that works like a negative income tax. That is, that beneath certain income threshold, beneficiaries receive money, and above it, they pay taxes. The other thing is that during the transition from what we have to the full UBI, we will need to do means testing to select the beneficiaries. This means that the key characteristic of universality will only be met at the end, at the point of arrival. In the case of Colombia, I have identified 13 programs that can be replaced and transformed into UBI. I have classified these programs in 4 groups, depending on their degree of replacement with the UBI. These are very high, high, medium, and low. The elements behind these categories are basically how much they share with UBI, their goals and characteristics. In the very high group are, for instance, programs that are almost alike UBI. This is, they are periodic cash transfers. Some of them are conditional, some aren't. They are all targeted to the poor. In this group, I have also classified the Earned Income Tax Credit, whose economic conception is at the core of UBI, but its functioning is very different. In the high category, we find unconditional and periodic cash transfers, but their beneficiaries are not necessarily poor, which brings a completely new discussion on the table. Once again, in this group, I have also classified pensions whose economic conception is also close to the UBI, and actually they function very alike. The medium group are subsidies related to housing. One is a cash-like transfer, the other is a discount in the utilities bill. I've left for the low category Programs that share some DNA with UBI, but merging them may become trickier. The table summarizes the subsidies under consideration. Figures in the description are in Colombian pesos, and for simplicity, let's assume that $1 is about 4,000 pesos. Let's start with the very high programs. We find there Solidarity Income, created as a response for COVID, and gives 160,000 pesos for family per month. Annually, it provides 1.9 million pesos, which are about $480. We also have Elder Colombia with a monthly subsidy of 80,000, Families in Action that incentivizes children's attendance to school and medical checkups, Youth in Action and Access that help university students, the very particular VAT compensation, which at the end is just an extra monthly payment of 75,000 pesos for Families in Action and Elder Colombia. Finally, on the very high replacement group, we find the Earned Income Tax Credit. To estimate its value, I consider the exemption of 25% for wage earners and the first 39 million income exemption. To make the analysis more meaningful, I compare these tax benefits with the 6% withholding tax liability for general services to non-filers. The high replacement programs are the cash allowance from the family subsidy system that provides workers' dependents with about 36,000 pesos, around $100 a year. In this category, I dive into the very complex scenario of pensions through the mean benefit Social Security. Under this scheme, beneficiaries are recognized with a pension until death, regardless of how much they contributed. For estimating the subsidy implied in this program, I use the following parameters: a minimum wage of 900,526 pesos, a pension of 13 monthly payments, an average survival of pensioners of 18 years, according to the current life expectancy of the country of 77 years. These parameters yield a cost per person at a present value of 207 million. With the same minimum wage and contributions equivalent to 16% for 300 months, the total contribution of a retiree amounts to 44 million. This means that the system covers the difference of 163 million per pensioner, 9 million per year, about $2,200. For the highly replaceable programs, we have the periodic economic benefits, which covers those who are not eligible for the regular pension. The subsidy is also the product of the difference between the savings of the beneficiary and the benefits, and the amount to $300 per year. The group that I consider with medium level of replacement is basically comprised of the utilities subsidies, which yearly amount to $50 for water and sanitation, $49 for electricity, and $22 for natural gas. Finally, at the low end of replacement, I propose the housing subsidy, which gives around 26.3 million pesos to each beneficiary, and the school feeding program, which are food rations that cost around $200 a year for each kid. After having identified these programs, let me now share how much the government spends on them under the current conditions and budgets. This estimate allows us to have some sort of budget baseline that determines the starting point of resources that the transition to a UBI would have. This new table presents the summary of these items. This means that, excluding the Earned Income Tax Credit, the country's current budget for subsidies, which have a very high replacement with UBI, amounts to 8.1 trillion pesos, roughly $2 billion. Let me clarify a couple of these figures. The cost of the mean benefit system is estimated considering that 81% of its beneficiaries earn a minimum wage, which means 1.16 million people, with a total cost of around 10.8 billion. As for the periodic economic benefits, according to the agency that runs this program, in 2021 it will cost 54 billion and 381 billion for a 4-year period. The nation's general budget provides resources for utility subsidies for 4 trillion pesos. However, it is key to remember that this is a cross-subsidy system where high-income dwellings finance the low ones. This means that actual spending on such subsidies is much higher. Finally, at the low level of replacement, we find the resources that the budget allocates for access to housing solutions, which amounts to 1.7 trillion, and the one allocated to the school feeding program is to 1.2 trillion. However, in both cases, it is important to consider that these programs leverage resources from local governments, so the final investment is much greater. When considering the resources of all these programs, the total amount spent on subsidies in 2021 will add approximately 28 trillion pesos, or $7 billion. To conclude the information on the table, let me resume the analysis on the Earned Income Tax Credit. To determine how much this mechanism costs, which would be the equivalent to the negative income tax type of UBI, I have turned to the data of the Great Integrated Household Survey, which is Colombia's Living Standards Measurement Study. This data represents 49 million Colombians, of which 20.7 million, 42%, report income, equivalent to 21.6 trillion per month. The most important estimation is to determine how many of these people would be eligible for the Earned Income Tax Credit. To do this, I assume that only those who get their income from a formal job contract, according to the survey, would be eligible. A total of 17.2 million turned out to be eligible, corresponding to an income of 11.7 trillion. Of this group, only 500,000 people reported a monthly income above 3.6 million, which is the threshold for the tax credit, making it the income upon which the 25% deduction and the 3.6 million exemption can be applied. This resulted in a total taxable income of 8.7 trillion. Therefore, if instead of being completely exempt, this amount was to be taxed at a rate equal to the withholding tax for the general services, which is 6%, it would mean a tax revenue of 500 billion. In short, this is the figure that is not collected monthly on account of the Earned Income Tax Credit. Therefore, the annual estimate will be 6.3 trillion. Thus, if we include the value of the Earned Income Tax Credit as part of Colombia's budget in subsidies, the baseline for the UBI will climb to 34.2 trillion. This is $8.6 billion. Now, following a methodology similar to that proposed by the World Bank in their last year's study on UBI, estimating the impact of the transition requires the following steps. Selection of the subsidies to be considered, subtracting from the household income the amount corresponding to these subsidies, and simulating the new disposable income values with the addition of a UBI. I have opted for a broad definition of income, which involves all the items considered by the Great Integrated Survey. In total, the 15 million households had an income in the month prior to the survey equal to 41 trillion pesos. This means that on average, each household has an income of 2.7 million pesos, or $675. Following the logic of the replacement between the current programs and UBI, a 5-phase transition is proposed, which is partly sequential and partly parallel. This table presents the figures for such transition. First, in the budget column, I reproduce the values established for each program. Then I have set them in chronological order according to the suggested phases. The budget of each phase is cumulative, since each one builds on the previous one. This first phase has 5.8 trillion from solidarity income. The second one accounts for almost 11 trillion when all the cash transfer programs are added. In phase 3, there are 13.1 trillion as we consider the resources from the family subsidy system and the periodic economic benefits. For the fourth, a budget of 18.8 trillion would be reached by including subsidies from the housing and utilities. Finally, in the last phase, resources equivalent to 30.1 trillion would be achieved by including the mean benefit scheme and the Earned Income Tax Credit. Notice that I have left the mean benefit Social Security and the Earned Income Tax Credit for the fifth and last phase. due to the expected high level of political debate around them, which will require a mature UBI to face it. To carry out the analysis, I used the current amount of solidarity income as the basis for the new UBI, which means that each individual would receive 50,000 pesos per month or $12.50. That results from rounding up the 160,000 pesos per household divided by the average household size of 3.3. To make the respective simulations, I again use the Great Integrated Household Survey of December 2019. This new table summarizes the results of such simulations. To understand the information, let's start with the second column labeled LB, which shows the baseline of current situation without solidarity income. This means that there are 2.6 million beneficiaries of Families in Action, Youth in Action, or Elder Colombia, who comprises 2.3 million households. A total of 4.6 million families are below the poverty line, equivalent to 30.3%, and the Gini coefficient would be 0.51. The first column simulates a world without cash transfers, therefore with no beneficiaries. In this case, poverty would increase slightly with no change in inequality. In other words, the comparison between columns 1 and 2 shows the weakness of current social assistance in terms of its contribution to eradicating poverty and reducing inequality. The following columns show the evolution in households and people served, the changes in the number of poor, the poverty line, and the impact on inequality. In phase 5, it is possible to deliver a UBI to each Colombian and there would still be resources left over. So methodologically, it is proposed to do a second round of an additional 50,000 per person, starting from the poorest household until the budget runs out. At the end of the story, an exciting result is shown because it leaves evidence that with the same current resources but better distributed, we could go from a 4.6 million poor households, which represent 30% of the population, to only 3.3 million, which means 22% of poverty. Inequality will also improve from 0.51 to 0.45, a very significant leap. Of course, this final result does not mean that the road isn't rocky. For example, moving to phase 2, in which we redistributed resources from the current cash transfer programs, has the potential to worsen poverty conditions. This is because the same budget is being distributed among more people. That is why it is so important that phases 1 and 2 are simultaneous, so that a net positive effect can be appreciated. That is, as the beneficiaries of Families in Action, Youth in Action, and Elder Colombia are replaced, the UBI is consolidated. As a great conclusion of this exercise, I can say that if we achieve a comprehensive budgetary makeover of the Colombian social protection system, we can significantly impact poverty and inequality. However, this will highly depend on not turning our backs on means testing, which of course compromises the characteristic of universality with which UBI is traditionally defined. In addition, the dimension of these adjustments invite us to reflect on whether they can be achieved overnight or even during a single government term.